If you're consistently losing money, always on the wrong side of the trade, and just frustrated, this video's for you. And listen, it's not that you're a bad trader, you just don't realize which side of the market you should be on. Today I'm going over the basics of market structure so you can start to put yourself on the right side of the trade and start making money today. Let's now focus our attention on the whiteboard where I'm going to break down market psychology to help you understand potentially what you're doing wrong and why you're always on the wrong side of the trade. And what you see in front of you here is what appears to be just some squiggly lines. And realistically, this is what the market is. It's just a bunch of random noise. So how can we make money in a random noise market? That's the question. The market has 4 major cycles it always goes through. Now keep in mind, it's not going to go in this order every single time. But what is important is to understand what market cycle that you're in. So if you're placing a trade, can you expect price to go up? Should you expect price to go in a sideways action? Or should you expect price to go down? And these 4 phases are accumulation, markup, distribution, and markdown. Now some people call the markup phase an uptrend. Some people call the markdown phase a downtrend. And most people call the accumulation and the distribution phase consolidation periods. But let's talk about how these work and how big players, the people with large amounts of money, are playing these, because let's be honest here, us retail traders, we're never going to be able to compete with the amount of money that they have. However, there are clues that we can understand to put ourselves in a winning position. So let's start here on the bottom left side of my screen. You'll notice it's just a bunch of randomness, right? We're putting in a high and a low and a high and a low, but it's not making like higher highs or lower lows. And sometimes it may, but in this case, you see that we put in the high here, we put in the low here, we have an equal high, maybe a little bit higher, and then we have like an equal low here. Now this is where the big players are being skillful. They're buying carefully because they have a lot of money that they have to put on the table, and they have to be very tactful, not as to move the market too much before all their orders are filled, because if they do, then they're not going to get the full size position that they want. Now what they realize is that most retail traders, they're out chasing the news. They're looking for the stocks that are in this massive uptrend, and they're buying these. These stocks, they're not sexy. Retail buyers, they're not buying these, right? They're buying these ones because this is the quick dollar that they're looking to make. But the real money, they're being very tactful about how they enter these trades, because they know over time, eventually the retailers are going to catch on, but they don't want them to catch on yet. So what they're going to do is they're going to wait. They're going to place an order to buy some of their shares here. Now you'll see that the market propelled slightly. Their orders made just a small dent in the market and it pushed the market up. But this isn't their full order. They're going to wait, and as it comes back down, maybe retest these lows, or maybe comes a little bit lower, they're going to buy more. And if it comes back down to test it again, they're going to buy more. Now after they have their max size, the market starts to trend in an upwards trajectory, as you can see here. So step 1, this was the accumulation phase where the smart money started to accumulate. And now the retailers are going to say, oh look, we've been waiting for price to break this level. And it finally did. Now the smart money, they already know. After it breaks out of this consolidation period, they already know that most retailers are going to say, okay, we broke out here, and they're going to start buying. And they're anticipating this because they need that liquidity to start to sell their shares into. And so what happens is, as all these players start to buy, the market pushes to this level, they're now going to start to sell their orders slowly. Maybe they'll sell some here, take a little bit off, and it pushes it down, and all the players that missed this breakout, now they're starting to buy this level here. And as it goes higher, you're gonna get more of the big players to start to sell their money, maybe here or maybe here, and then this pushes the price down where maybe more buyers start to buy here. And usually by this time up here, all the players who bought in here, the smart money, they're out of their trades. And maybe some of these players will realize that, okay, the uptrend is now over, and maybe they start to go short on their positions, hoping to anticipate an eventual downtrend. At this point, if you understand market structure, you can really start to put yourself on the winning side, because most retailers don't realize, first of all, most retailers don't realize that there are these 4 different phases. And once you get into this kind of period to where you're seeing a high, a low, an equal high, a lower low, a lower high, and it's not really going anywhere, that should be your first clue that we've now entered a new phase. And after an uptrend comes the distribution phase. Now, I really want you to keep in mind, just because we're in a distribution phase does not mean the market's going to go down. It could continue for years in the distribution phase, or it could propel higher, we don't know. But skillfully, if you understand this, you realize, okay, the uptrend is now, it's over. So if I'm looking to trend trade, this is not the environment to do it in. Now, you could start to trade differently. If you realize that you're in this kind of pattern, you can now start to put together, say, maybe I can start to parallel trade. And basically parallels, when you draw them on your chart, charts give us the answer. They're telling us the real psychology behind what's going on. When you're in this kind of phase, this parallel channel phase, you could say, okay, well, when price got to here, it sold off. And then when it got near this level, it rallied. And when it got to this level, it sold off. We can now start to say, okay, instead of trend trading, what we can do is, if it gets back down to this level, maybe I can start to look to buy, because we know that this is support on our chart, and we can aim for a target up here with a stop down here, right? We can now start to think through this. But in any case, the distribution phase, this is when the smart money has sold all their positions. And again, they're not selling all at once. They're not selling when it gets here to the top, because that may crash the market. They're being very selective. They're selling up here, pushing the market down. They're selling more up here, pushing the market down. And then finally, they're all out of their position, and then what happens is the market will then go down. And again, it doesn't mean it will, but this is a good indication as to how the market works. And so how do we know it's actually broken? You'll see your key levels, and when that level is broken, price pushes through it. This is a good indication that we are now entering a new phase. And in this particular situation, this is called the markdown phase. In the markdown phase, or the downtrend phase, is when price is now putting in lower lows and lower highs, lower lows and lower highs, lower lows, and so on. This is the panic phase. This is where all the smart money has sold and made their money, right? And maybe now they're going short, and all the retailers who are not educated are still trying to go long. They're buying up here, and suddenly when it breaks this level, what do they start to do? They panic and they sell, and that propels the market down even lower. Then getting to a point to where the smart money will then start to buy these dips and repeat this cycle. Now again, this is like a perfect example of how the market would work, and the market doesn't work perfectly. It's messy, it's random, and this is why most people don't make money. But once you can start to understand how these pieces work, you can start to understand market structure and where you're at, you can now start to put yourself in winning trades. Now that we understand market structure, we're now going to look at some real charts so I can show you some real examples. So what I've done here is picked a random ticker, AON. Whenever you're analyzing market structure, remember, the higher the time frame, the less noisy. So if, say, you want to be a trend trader, it may make sense to look at your biggest time frame. So what I've done is I picked the monthly chart, because it's going to filter out a lot of noise. Now remember, there's a lot of different strategies within the market structure that you can do, but for this video, we're just focusing on market structure. So let's take a look here from the left. What do we see? We see a high and a low. And now we have a higher high based on this previous pivot. So what market structure do you think that we're in right now? If you said an uptrend or a markup, you would be correct. And then what happens is price rolls over and puts in a higher low based on this low. Just from that simplicity's sake, you would already know the market structure that we're in. So if you wanted to, say, place a trade in this particular ticker, it may make sense to go with the trend, because they say the trend is your friend until the end, and always go with the trend. Now listen, there's a lot of skilled traders that can obviously trade against the trend, but to make money consistently, it's always a good idea to go with the trend. Now this trend would then be in jeopardy if, say, price came down and closed below this level here. We could then now say, okay, maybe we're going into a downtrend, or maybe we're going back into the accumulation phase. But to make this simple, high, low, higher low, we're in an uptrend. Price comes up, wasn't able to capture this, pulled back, but look, put in a higher low, and then it broke out. And then right here, consolidated. So this would be an accumulation distribution period, because this is over the course of 9 months. So if you were to break this down on a daily, you'd just see a bunch of sideways action, right? So this is the distribution, or what you would say the accumulation stage, because we don't know what's going to happen. We don't know if it's going to go down or it's going to go up. But then after month 9, what happened is it broke out. So now you would say, okay, high, low, lower high, higher low, broke out. We're still in an uptrend. We have a high, low, higher low. And now in this point in time, you're going to see, okay, well, what's going on here? We now have a lower high. So if you didn't want to go long, that would be understandable because you didn't break this high. As a matter of fact, you came right back down and you tested this low. So maybe now you want to stay out of the market until you get confirmation that we're going to break this high, and you did. So now you can say, okay, yep, we're still in an uptrend. Let's look for some longs. And then price just continues. And then as you can see here, this is another accumulation period where it just went sideways, didn't make any higher highs or any lower lows, just went sideways again for a few months. So again, here is a longer accumulation phase. And just like before, just because we're in accumulation phase does not mean the market's going to sell off. It's just important to know if we're in this phase where we're not making relatively new highs or relatively new lows, that we're in this sideways consolidation. The smart money, they're doing something. We don't know what it is, but we need to play with them. We need to understand what they're doing. And so now we get to where we're at now. And now let's look at this. What kind of market do we think we're in now? Well, just looking at this, we see that we did make a higher high from here, and then we did put in a equal low here, and now we're just chopping sideways. Now, we've had a pretty good run on this chart. I mean, we've been in a bull run now since, what is this, November of 2012. But now you can clearly see that we're putting in this flagpole pattern where we push down sideways consolidation, right? This may be the time where it starts to break down. All we can do is monitor this and say, okay, we're definitely not in an uptrend. So if we wanted to take longs for us, to follow the trend, this would not be the market environment to do that because we haven't confirmed on the bigger picture that we're in an uptrend. Right now, we're in this distribution accumulation phase, so it may just be best to stand to the side until we're able to actually break these highs. So there we have it, guys. I really hope that video helped you out. If it did, be sure to drop me a comment, like, and listen, if you have any charts that you want me to take a look at for you, I'm happy to do that. I'm going to leave my email down below. Just shoot me an email. We're all here together, and we should all make money together. Also, I am going to leave some links down below. These are affiliate links for some education. I believe that everything starts with education. Understand if you do buy it, it's going to help the channel out, which obviously I would appreciate. But listen, if you want to make money in the markets, you got to have the right education. And these books have changed my life, and I really think they're going to help you out as well. Again, thanks so much for swinging by. I look forward to seeing you on the winning side, and we'll see you in a future video. Take care.